Good afternoon. My name is Jimmy Charles, and I've been trading the stock market for about 10 years now. And I've been in the Forex market trading my own account for about 2 years. It's a pleasure to be here today, and I've always wanted to help people in the financial world that do not know anything about the financial markets, the stock markets, the Forex market. I found out that by having a YouTube video that will help a lot of people. And it took me a little bit of time to think about it and actually deciding on doing it, just because I've seen so many gurus out there, and they've done a great job too. But they've done a great job as far as explaining the basics, and but I just wanted to be probably part of them, not to be called a guru per se, but to jump in the boat as far as helping people trade and knowing the basic of trading, especially forex trading. Um, to start, my name is Jimmy Charles, and in these slides, I'll be talking about money management and trading methods or different tactics that I've used over the years. Um, So, the three elements of successful trading that I want to talk about, that I would like to talk about today, is number one, price forecasting. Number two, trading tactics. Number three, money management. In the following slides, I'll be explaining um, to you as far as what are those entail. So, what is price forecasting? Price forecasting helps the trader to focus on what to buy or sell in the future through the lenses of fundamental, technical, and sentiment analysis. Um, Also, price forecasting also prevents the trader from reacting to the market sudden swings. And price forecasting also helps the trader to be proactive in the markets. Let's start with the first definition of price forecasting as far as helping the trader to focus on what to buy or sell. Usually when someone look at the market, talking about charts, you will have different either different levels or different trend you're looking at. Either the market is trending up or sideways, which is ranging, or downtrend. So when you look before you place a trade, you have to think about all this, because if you enter a trade blindly, not knowing the direction of the market, or what's trending, what's not trending, or if the market is consolidating, so it may not be a good way to do it. That's why price, in a sense, everything in the market is based on price. So knowing the direction of the market helps a lot. So also, price forecasting helps the trader from reacting to the market sudden swings. So the different swing of the market is based on different people. It's pretty much pure sentiment analysis. So as you know, people's behavior and sentiment varies from time to time. So if you already have an idea or exact of what you want to do or what the market is doing, so you can position yourself to be successful. So you're not going to react to to however the market is reacting. So you can really position yourself to kind of counteract the market or knowing what you want to do. So that's important. Also, um, so the price forecasting, it doesn't help. So it's not there for someone to be stagnant, because the market is always moving. There is always momentum in the market. So as I said before, it's a matter of how to position yourself to be successful in the market. So how can we be successful? In order to be successful in the market, we have to have a method. So we have to have tactics to do that. So number one thing that's very important, it's timing. Timing is very crucial as far as when to enter the market, because there is the right time to enter the market, there's the wrong time to enter the market. So timing is important. So in order for you to accomplish that as far as your entry, you have to you have to have some tool in your toolbox. So you have to know what moving average is. You have to know certain candlestick patterns. So you have to know, the driving force of the market. So there are all of you have to know all of this stuff. So you have to know if the market, if the market is about to break out, or what the market is about to break out off of. Is it a trend line? And also, is it from a support? Is it from a resistance level? Also, you have to use a method called the Fibonacci retracement. Um, I don't think you have to, but it helps a lot to kind of gauge your trading. And also, you have to know if the market is gapping, or where is the market is gapping. Is the market is gapping up, or is the market is gapping down? And so the last thing I would like to talk about, and which is to me the most important thing in trading, it is the aspect of money management. You can be a good, reliable trader. You can know the candlestick patterns, chart pattern. You can also know the market swings and a lot of things you may know on the macroeconomic side, fundamental technical analysis and cement analysis. But if you not a good manager, if you don't want to be patient, and it may come to at your own risk, to which may not be which can be a bad thing, because you may end up losing your account, which you don't want to do. So in order for that to happen, you have to know the why of your trading system. Some people get into the market, of course, to make money. I would like to make money too. I make some money too, but I've been doing forex for not too long, about 2 years. Um, but I've made some money, I've lost some money. And when that happens, you have to know the reason why. You have to know the why of your trading, so when it doesn't go your way, you have to think again why it didn't work out. So one of the techniques that can help you, to do that, kind of to hold down your horses, is the use of your stop loss. Some people use mental stop loss. Sometimes I do that too. I use mental stop loss just because I can kind of gauge, the market at on certain time frames, and then and it may or may not go my way. So when I really don't know, I'm not sure, if the market is going to go my way, then I put a stop loss. Like, the key is a reasonable stop loss, because as the stop loss can be too tight, then that's not good. You're going to have repeated or consecutive losses, which will put a dent to your capital, because you don't want to do that. You really want to protect your capital at all costs. And so you also have to, once you put your stop loss either mentally or you actually put it on the chart, you have to consider, market volatility. You have to consider it before, but it's important to do it, um, because the market, it really depends on the instrument you're trading. Like, indices are more volatile than certain currency pairs. So you kind of have to gauge. It's either you want something that goes up and down real fast, you can make more money fast, or you want to take your time to do it and build over time. It's really the type of trader that you want to be. And so once you have your stop loss, predefined, so that will really help you to have a predetermined risk reward ratio. And you always want, see, it will depends up to you, but it's advisable to use a reward to risk 3 to 1, or risk reward ratio of 1 to 3, just because your profit will be greater than your losses, and you don't want to lose more than you're making. So what if I've done, because you may ask yourself, what if I've done all this stuff, respect all the money management, have a good entry and exit, so what else, and it still doesn't work out, then what do I do? What I've done myself, I've always looked inwardly. So I will zero in on, self behavior after either period of consecutive losses or winning in a period that I will have. Then I will pinpoint exactly where I fail or what I need to improve on. So I think the process of becoming a good trader is really good too, because it probably help you to become a better person too, because you don't want to take life so aggressive that you kind of losing the part of enjoying every single details of life, which will be like a mixed bag of will be a mixed bag of good experience, bad experience, and disappointment, and all this good stuff. It's the same about trading too. It's really that's why psychology is important. You may hear other trader talked about that a lot. Psychology, and then money management. Risk reward ratio is because it's all about behavior. You know, like in anything in life, but you have to see if those type of behavior will help you. If all those behaviors or those results driving me to be a better trader. So that's really what you want to become, like an improved trader at all time. And the next thing you really want to do is you want to decide to be an aggressive trader or a conservative trader. So, and also the level of commitment you want to take with that trade. So what is money management? Money management goes to why of your trading, reasonable of stop loss. We talked about market volatility, predetermined risk reward ratio, and zeroing in on sell behavior, deciding to be either aggressive or conservative trader. You decide the level of commitment of the trade. So finally, the guidelines for money management and trading will be the direction you want to take. As far as of the trend, you also have to trade in the direction of the trend, because once a trend starts, it tends to be stronger, and you really don't want to go against it, because that will be at your own risk, which is not a good one. So what I would advise to do is you have to let your profit run at all time, or to the level of the same way you have a mental stop loss, or you may have either a mental take profit or an actual take profit on the chart. So you can know exactly, this is my target, this is what I'm shooting for. Or you really, sometimes what I would do, I would not wait for the market to go to my TP target or to the take profit target, just because there may be like a reversal forming, in the chart. So I don't want to risk, so I don't want to lose my profit that I've worked so hard to make. So I'll cut it short. I mean, not short, but as close to the profit target that I've placed before, just to avoid market reversals. So, and also don't be an impulsive trader, because I know sometimes the market is driven by news, and then what you could do, you can kind of you can try to forecast what the market may do, because even though it is a 50 even though it is a 50-50% endeavor, or what you could do, you can just wait. You don't have to. I've talked to some fellow traders, some people that I know, like, you don't have to be at the market in all times. You don't have to trade every session of the market. So you have to pick what type of trader you want to be, an aggressive trader, conservative trader, or a swing trader, you know, stuff like that. Like, it's up to you to decide what type of trader you want to be, but don't ever forget about risk management, because that's very important. And also, what you have to do, and you have to look for great setups in different forex pair, or if you're trading stock market or commodity as far as gold. You kind of have to, what I would do on Sundays, I will start looking at the charts to see different forex pair that I'm used to trading, or that I'm about to trade the following week, and look for setups. And you kind of mark your charts, kind of know what's your risk reward going to be, even though it may not go your way, but at least you have a plan. The key is always to have a plan. Don't ever go into the market blindly. So also focus on at least 3-to-1 reward risk ratio, as I've talked before. And so also, if you're doing, if you're going to add position, never add to a losing position. So always add to your winning position. And then one of the things that's important to is keep your trading simple. Trading can be a very lucrative thing to do. You can make money doing it, but if you try to complicate things or try to put too many indicators on the charts, that may be very confusing. So the more simple you look at it, the more simple you keep it, the better, because it will help your mind to be, you know, at a clearer state, so you can think better, you can zero in better as far as focusing on what's important to you as a trader. Um, Also, to remember to close out losing position early. So you don't need to wait for stop loss target to be reached. So because that will help you. If you're in a losing position and your stop loss is going closer to it, so you can close it early. You don't have to wait. And for us to end, it was a pleasure to at least have my first video today. And also, don't ever overtrade, because that will lead to screen fatigue, and also you may be confused when it comes to certain position why you enter the trade, and then the market conditions may change, and it's okay to close the position early. There's nothing wrong with that. They will not put you in jail for that, or nothing really will happen to you, and the market will always gonna be there. um, Once again, my name is Jimmy, and it was a pleasure to have my first video, and don't forget to like and subscribe on my YouTube channel. Thank you.